What's going on, everyone? In this video, I want to talk a little bit about scalping, especially when we're scalping the NASDAQ futures. I think things tend to get a little fuzzy and hazy when you kind of come up with your own definition of what a scalper is, right? A lot of times, people that I've talked to, traders that I've talked to, they think that because you're a scalper that you need to trade 50 million times a day, okay? That you need to be long, short, same candle, you need to be, using every break over a previous candle as an entry for a long, and every red candle that closes below a previous red candle for a short. That's simply not the case. You're going to chop yourself up in the long run. Now, I'm not saying that you can't pass evaluations by scalping very quickly with these prop firms. I'm definitely not saying that you can hit a nice hot streak where maybe you have 5 winning days or 2 weeks worth of winning days and able to get a payout. It's definitely possible, but the longevity of trading that way is just not going to be beneficial, because you're going to run into too many days where you're doing good for 3, 4, 5, 6 days in a row, and then you come into that losing day, and because you're trading so much, you start to overtrade, you start to revenge trade, you start to increase your size when you're down instead of just walking away on the day, and you tend to lead to a lot of 1 and 2 day blowups, right? Where you run up a nice balance and you're almost at payout and then you blow it up. Where you're very close to passing evaluations and you run into a bad day and you blow it up. So my definition and my advice for a lot of traders is to treat scalping as a very, very defined method to snipe a couple good trades a day, okay? Because when you're scalping, you're mainly looking for momentum, and you're either looking for ranges that are consolidating and breaking out. You're looking for reversions off of super big moves and super big candles. You're looking for supply and demand retest, reclaims, and breakdowns. You're looking for maybe 15-minute, 30-minute initial balance range breakouts and breakdowns. So you need momentum in the market to hit a nice scalp. But when you scalp, you're able to make money really, really fast. And when you can make money really, really fast, a lot of times traders will tell themselves, or they'll think to themselves that, well, if I can make money really, really fast scalping, the longer I sit here and I do this, the more money I'm going to make. And that's not the case. And again, if you've been trading for longer than a week, you know that that's not the case, right? So what I like to focus on and definitely share with people to kind of shift their focus is to treat your scalps as if you have 1 or 2 bullets, that if you shoot those 1 or 2 bullets, it needs to hit your target and it needs to drop dead. Okay. So when we bring that into trading terms, is I don't just want to, for example, this morning, today was a holiday, so price action was a little slow and wacky, but for example, I don't want to go long just because we have an excessively big, large green candle. Okay, because a lot of times traders will get stuck here, here, and here, and then we start to pull back. And then it's like when their position goes against them and they start to go to break even and start to go into drawdown, they panic, and either they close for a much bigger loss than they should have, or they keep continuing to dollar cost average down and just continue to lose more money until they eventually blow up. Okay, so what I would look for here is extreme patience in trying to find the best potential spot that you can make money very quickly, but by waiting for that potential spot. So if we were looking at today's price action, I don't necessarily want to chase this move. And for all the traders that did chase this move, not saying that you could not have made money on it, but it kind of gives you a false sense of confidence, because anytime you see a big green candle, you jump in and it doesn't always provide you the same outcome. I'm more comfortable in a position where I allow this candle to do what it needs to do. I start to watch things consolidate, and it's clear here that we're creating a little bit of a flag pattern, telling ourselves that if, fix my drawing tool, where's my drawing tool? I got to fix it. I like to say that, if, for example, we do not break out to the high side here, okay, and if this starts to trickle back down, I have to tell myself that this could still be a break and retest over this 20 SMA bias. Now, however, if we fail to bounce, and we fail to bounce and we fail to take out the high of day and we start to lose, okay, we start to lose this area of support, which is my 20 SMA on a 5-minute time frame, well, then at this point, I can clearly say, okay, I can clearly say that as long as we're not taking out those highs and we're trading below this range here, okay, this can be acted as an area of resistance, okay? So the moment that the bias, the short-term bias starts to flip, trading below this simple moving average, we can then start to tell ourselves that we can use this trailing down 20 SMA as a gauge and a guide to hold our short positions, because clearly the market is telling you that if we break these highs, we're going to scream to the upside. Clearly, okay, we've already put in a high, we've already back tested support. So if it graduates and starts to run upwards, then clearly you're not going to want to be short. So in real time, it's very hard to identify if this is nothing more than a pullback that's going to snap and take out these highs, right? So you have to trust your technical analysis, and you have to bring yourself to paint yourself the picture and tell yourself the story that makes sense. Well, if we put in a high and we consolidated and we consolidated and we consolidated and we consolidated, and then we've lost the range, you're better off telling yourself that I'm just going to start dragging this consolidation range across the right hand side of the chart. And I'm going to tell myself clearly, I don't want to trade inside this small range. I don't want to trade inside this consolidation. This is a brick wall. And until we break through this brick wall, my bias can now lean to short as soon as I see something technically that is telling me, here's an indicator that it might be time to go short. Now, for me, it can be various different, indicators that you can use. You can do something like where you're reading candlestick price action, where you're looking at this doji, you're looking at this, engulfing red candle here, losing the bottom of the range. You can set the high of day as a stop, okay? You can do kind of what I do, wait for it to back test that support of the 20 SMA. And if we fail to put in a new high and consolidate off that demand zone, then if we lose the 20 SMA, what I can do is I can use the previous 5-minute candle high as a stop, and I can enter in short on the confirmation breakdown of the candle that closes below the 20 SMA. You can also wait for the 20 SMA. You can wait for the VWAP to get broken. You can wait for the 21 EMA. You can wait for the 5 SMA. You can wait for a 50 SMA. It doesn't really matter which moving average you use, which EMA you use, which, if you're using VWAP, doesn't really matter. In my particular case, I trade with the 20 SMA. So you can wait for a breakdown of the 20 SMA, and you can wait for the retest. So here's a break and retest of the 20 SMA showing strength to the downside because we did not reclaim the upside. And then you can start to put a stop loss anything over the 20 SMA, and you can get short, okay, on that break and retest, which is a perfect little trade as well. You can also wait for a break and retest and then a confirmation through the zone. So the range would be here. This is your consolidation. This is your retest into the 20 SMA. And as soon as you break through the bottom of the zone, you can get short. So a lot of ways that we could skin this cat here. I just want to make sure that the focus goes to, if I'm going to put on a trade, technically, I want it to be the best potential trade that makes sense to me. So does it make sense to me? And again, it could and it could not for you. Does it make sense to me to get short here when we break this range? If it does, great. You have a clear defined risk. If it doesn't make sense to get short until we close below the 20 SMA and see a following candle confirm, then great. You're going to enter here and you're going to trust that risk management by putting a stop over the candle high. If it's waiting for the break and retest and then a loss of that consolidation retest zone, then you would be getting short here. All of these trades are completely valid. And looking at this in hindsight gives you a clear picture on what you could do and how to create a playbook for future live price action that you're going to be trading. So keep in mind, you don't need to try to go long off this 20 SMA, short down the 20 SMA, back long here, back short here, back long here, back short here. Okay, consolidation, we're going to hold the floor, go long here, get stopped out. Don't do that. Find one particular setup based around rules that make sense to you. Analyze the risk that you're putting on the table and fire that 1 or 2 trades. Okay. Remember, if you have an opportunity to take 1 or 2 trades all day long, what is that perfect setup going to look like to you? And where can you sit back and actually enter the trade in a calm manner, not rushing yourself, not just firing off, clicking buy and sell because of the price actions moving. Remember, we do not want to operate off of dopamine. We don't want to operate off of emotions. We don't want to operate off of adrenaline. We want trading to be boring. Even when you're scalping, just because you're scalping doesn't necessarily mean that you have to take 3 dozen trades today. Sit back and try to scalp the best potential trade that you can find on the charts. And if the trade wins, walk away. Close the computer screen. You're done on the day. And over time, I personally would rather fire 1 scalp and take 10 or 15 points take profit on 2 or 3 mini contracts over time than to sit there and take 5, 6, 7, 8 trades, playing a little bit smaller size and trying to make X amount of dollars. Like, let me give you an example. Let's say you have a goal of making $250 a day. Well, that's around 15 to 20 points, right? Give or take slippage a little bit, give or take commissions, fees, and stuff like that. You need to make at least 15 points, 12 points, between 10 and 15 points to make around $250, right? So if you're trading 1 mini contract for every 5 points that the market is going to move in your favor, you're going to be up $100. So after 10 points, you're going to be up $200. After 15 points, you're going to be up $300. So you need to make between 10 and 15 points on a mini contract. Now, I would rather sit back all day, get my account to a point where I'm able to trade that 1 or 2 mini contracts, get my account balanced to a nice healthy cushion to where when I seen one setup that makes sense to me, I would rather fire off the trade and make a quick $200 in one trade than to sit there and scalp 5 or 6, 7 trades to try to make $200. Does that make sense? Because the more trades that you take, you're just opening up the probabilities to you having a losing trade. I would rather in 6 months from now build up an account balance of 2, 3, 4 times of what I'm trading now and be able to put on risk on one trade with 2 mini contracts, where for every 10 points that I take out of the market, I'm going to make $400, right? Instead of having to take 6, 8, 10 trades to make $400. I would rather fire that one shot at the best potential trade that I can find. Now, if you guys stay to the end of the video, doing something cool for you guys, I have an amazing private lesson for you guys. It's a 12-minute video lesson on patience. If you have problems with overtrading, definitely watch that. It's completely free. Also, if you guys want to join Evolution Traders Discord trading community, it's free to join. You get access to a lot of educational content that is not on YouTube. And there's a lot of really good traders in there as well. That link is down in the description box below as well. I will see the rest of you guys inside of Evolution Traders for live trading, for the live trading live streams. Again, be safe, guys. Be patient, and most and foremost, like last thing, guys, is just don't get overly excited, okay, with trading. I know it's easy to get overly excited with trading. Try to make things as calm as possible. This is a career and a profession where you need to operate with a clear mind, so don't let those emotions run away with you. I'll see all of you guys on the inside.